Welcome back. I'm Pratap here. Today is 26th February 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And all the training lessons are available at our YouTube channel. We placed in the playlist supply demand zone price action course. I have provided the link to this playlist in this YouTube video description. You click the link, you will directly get into this page. Then scroll down to the bottom of this page. And here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the Telegram channel. Now let's get into analysis of the high liquidity zones that we generated in the previous report. In the last report, we have identified 7 high liquidity zones from daily time frame and 75 minutes time frame. Out of these 7, 3 are triggered, and out of these 3, 2 stocks we got a profit, and in one stock it is stopped out. So let us look into these trades first, and let's start with Aurobindo Pharma. Even before that, do you remember the Nifty and Bank Nifty chain video I have released yesterday? And I have done analysis on Nifty 50. And yesterday I told you this is a range. Prices will be moving. Because here we have a 15 minutes high liquidity zone. And here we have 5 minutes high liquidity zone. So probably prices will be moving in this area. And today prices started from here and entered into the 15 minutes area. Inside the 15 minutes area, we have 2 5-minute zones. One is a 5 minutes high liquidity zone, and another one is a 5-minute zone, another fresh 5-minute zone inside the 15 minutes high liquidity area. And today, prices entered into the 5 minutes area, and sometime there was a push from this area, only it reached into the 5 minutes target. It couldn't able to reach beyond the 5 minutes target. The reason is, see, we always look for 15 minutes targets when we have very good high liquidity daily and 75 minutes demand zone. But here the 5 minutes high liquidity is inside the 15 minutes high liquidity. Sometimes it may push up to the next 15 minutes supply zone. But today, this 5 minutes zone is not having enough power. It is having the power, but supply is much stronger than the demand. So it was able to hold the prices for several attempts. This is the first attempt, and this is the next attempt, and finally prices went deep and this zone is violated. That means by the time this demand is violated, it consumed a lot of supply in this area. But your 5 minutes, your trade on this 5 minutes high liquidity demand zone area might have been stopped out. It would have hit your stop loss. But look into this. Soon after, let me delete this 5 minutes area because it is violated so that you will get clarity. See, after that what happened? Prices entered into the another 5 minutes demand zone, fresh demand zone, but this is inside the 15 minutes area. The prices went a little deep inside, not very deep, probably up to the middle of this zone. Now see, the demand become very strong because supply has been consumed here. The previous 5 minutes high liquidity consumed a lot of supply. And remaining supply, by the time prices enters into this, there is no more supply. And now there is a push from this area. Up to the next 15 minutes, it reached the 15 minutes target. See here. Here we have a ERC candle, leg-in, base candle, and a drop candle. We have a supply zone. So prices reached the supply zone. So you would have got 83 points profit from here to here. Maybe if you would have taken a little deep entry, probably you would have got close to 90 or 95 points profit you would have got. But anyway, from here from this distal line to this supply zone distal line, it is around 83 points. So it would have been a good trade for you. But why it didn't reach up to this 5 minutes area? Because the new 15-minute zone is created today here. Today, during the market, a new 15-minute zone is created. Definitely it will hold the prices. And moreover, today, most of the time, market is in the bearish. Even then, this demand worked very well, and it gave you nearly 83 points profit. That is what we discussed yesterday. This will be the range between this 15 minutes demand zone and between this 5 minutes high liquidity supply zone. Prices will be moving. If one of these zones are broken, then market conditions will change. Suppose if this 15 minutes high liquidity demand zone is violated, now it gets support in this area. Here again we have another 15 minutes high liquidity demand zone here. So somewhere here it will get the support if there are any fresh 5-minute zones inside this area. And if this high liquidity 5-minute zones are violated, market will reach the all-time high again. Hope if you have gone through yesterday's the Nifty and the Bank Nifty supply demand zone chain, I gave you exercise to do the same analysis for Bank Nifty. Nifty, I did the complete analysis. So as we discussed, within this range, the market is moved today. Even though 5 minutes is stopped out, the next 5 minutes, it pushed the price and gave you 83 points profit. Okay, now let us look into Aurobindo. It was the stock near the supply zone, but Aurobindo is moving between 75-minute supply zone, high liquidity supply zone, and 75 minutes daily high liquidity zone. It's not daily, I'm sorry, this is also 75 minutes demand zone. This is 75 minutes supply zone. Between prices have been moving, but recently see here the prices reach till the distal line, and when we did the recent analysis at the lower time frame, we know that the 15 minutes demand zone will be violated easily. But 15 minutes supply zone, we are expecting an entry. Here we have a fresh zone, fresh 5-minute zone. This is the zone. The same thing we discussed earlier also. And this is the one we got the trade during our last time when we discussed about Aurobindo few days back. This was our successful trade. And we are expecting prices to reach the next zone because it is a fresh zone. We are waiting for an entry in this zone. But today prices didn't go. So from here the prices, because this demand zone we expected, this will be violated easily because there are no fresh 15-minute zones inside this area. If you look into this, there is no fresh 15-minute zone. When there is no fresh 15-minute zone, obviously the zone will be violated. That is what we expected. But what institutions will do in general, they will keep a trap below this. Below this 75-minute zone, there is a trap here. We have a rally, base rally is there. If you look into 5 minutes, 5 minutes point of view, see here. We have a rally, we have 3 base candles, and again we have a rally with gap. The same area is also acting as 15 minutes also. So that means this is both 15 minutes and 5 minutes trap, bear trap. Because this is a high liquidity demand zone. This is the one immediately available, 5 minutes or 15 minutes demand zone which act as a bear trap. Most of the time institutions keep traps below the high liquidity zones. See today what happened? because we know this zone will be violated and we get an entry in this trap. Exactly, we got the entry at 10 o'clock candle. And finally at 1 o'clock 15 minutes candle, it reached the target. So this is the way Aurobindo has given a profit 19,965 rupees, which is 7.4% return on the investment. So this is an excellent bear trap. And moreover, we know the zone will be violated. That also we know. Because we already know when a zone will be violated. We know all the conditions. We've been discussed several times in our analysis discussions. Even in training lesson also we discussed during the lesson zone confluence. There I explained the scenarios when a zone will be violated. I think that is as part of lesson 16.2 or something, or 16.1, or both the lessons. So this is one successful trade, that is as a bear trap. 5 minutes or 15 minutes bear trap. And the next one is ITC. Again, we got another successful trade in ITC. Let me open the chart. This is a 15 minutes, this is a 75 minutes high liquidity zone. Look here, we have a rally, base rally. This is a 75 minute zone. And we have fine-tuned this 75 minute zone. It is a fresh zone before prices enter into this area. This is the first time prices entered today in this zone. And it reached up to our 5 minutes fine-tuned area. How we fine-tuned? Very simple. Inside 75 minutes, you identify a 15 minute zone. You might have did this exercise. See here. We have a rally candle. We have 1, 2, 3, 4 base candles. And again we have a rally candle. So this is the 75 minutes, this is the 15 minute zone inside the 75 minute zone. Rally base rally. Inside this rally base rally, again you identify a 5 minute zone. See here. Again we have a rally candle, 2 base candles, again a rally candle. After that, see the move. It's a very big move from this zone. And moreover, it is a fresh zone. Prices haven't entered into this area. And today, the prices entered into this zone and reached this zone. Prices went more deep inside, but it is not stopped out. By this time, the supply has been consumed, entire supply. Today is a bearish day overall in the market. And moreover, ITC is also part of Nifty 50. But even then, what happened after reaching into this zone? The demand, after consuming all the supply, still there is some more pending orders in this area, pushed the prices up. And finally, it reached the target. And this is RR is 1:3.4. So 1:3 is a very good trade for us. So 1:3.4, that means close to 1:3.5. So this is an excellent trade. So how much profit it has given? So ITC has given a profit 3,520 rupees, and which is a 3% ROI as per one futures lot. ROI is less today. The reason is there is an immediately available supply zone here, 15 minute supply zone, which is holding the prices here. So we didn't have good ROI today. Our average ROI is 6.1%. See, during intraday 3% ROI means it is extraordinary. But our high liquidity zones always provides an average ROI 6.1%. Today we didn't achieve that. The reason is within 3% ROI level, we got a supply zone. So we have to limit. But why we took the trade? Because the RR, we have a good RR. We have 1:3.4 RR is there. So this is about another successful trade. And another one is Chambal Fertilizers. This one is stopped out. Let me show you the zone that is stopped out. There is one already tested zone. We have to delete, but for our training point of view, I will show you and then I will delete. But the zone that is violated is more important. First of all, this is a 75 minutes high liquidity demand zone. We have a rally candle, 1, 2, 3, 4 base candles, and again a rally candle. Sorry, this is a drop candle, 3 base candles and a rally candle. Drop, 3 base candles and rally. Because this is a ERC candle. So we are using as a legging. Okay, in this 75 minutes zone, we have a 15 minutes zone, 2 15-minute zones. This is the drop, base, rally. This is the one zone. But this is already tested. So tested zones mostly violated. Just for our learning point of view, I am showing you. And here we have a fresh zone. What is that? We have a rally candle, 3 base candles, and again a rally candle. That way you can consider. Or you can consider this entire candle as a ERC candle. ERC candle is a legging. This is a base candle and we have a rally candle with gap. Probably this is a pro gap. That way also you can consider. This is what I have drawn, drop, base, rally in my analysis. So here again another drop, base, rally. So within these we have fine-tuned to 5-minute zones. Because always we should look for fresh zones. Fresh 5-minute zone. 15 minutes tested, okay, we can accept. But 5 minutes should be fresh. That way we will plan. If 5 minutes is not fresh, at least that should be high liquidity zone, 5 minutes. If high liquidity, we will take multiple tests. If it is a tested zone, we won't take the trade. Look into this. We have a drop, 1, 2, 3, 4 base candles and a rally candle. The only concern I have is this base candle at 5 minutes level. The range is a little high, but still okay. We will accept sometimes. Maybe it could be a little higher. So that with that benefit of doubt, we can accept a trade here. This is the 5 minutes zone. First, let me delete this 15 minutes area. Exactly, this is what we are expecting our trade. But below that, there is one more zone. This is a 15. Inside 15, we have a rally candle, 2 base candles and a rally candle. See, after that prices came, they went more deep inside. And moreover, prices moved within this area here continuously, 1, 2, 3, 4, 5, 6. After that again, it gave another test. This time, is it going to work? We don't know. It is already tested. See, we can take a trade if it is a high liquidity zone, but this is not a high liquidity zone, according to our software also. So, already tested 2 times, so we can't risk more on this zone. So that means we have 2 5-minute zones. This is LOTL concept. We have a 5-minute zone, we have another LOTL, but this one is already tested. Let me delete. This is a fresh zone. That's why you want to plan a trade in this particular zone. But today, what happened? This one is stopped out. See, actually we have concern about this candle here. This length is very high. Maybe this can be considered as ERC candle. If this is ERC candle, there is no base candle, and then we have again another rally candle, then this zone could be invalid zone. But still a benefit of doubt we have given. This maybe, if it could have been a little more range having higher range, definitely I would have considered this as a ERC candle, but some kind of benefit of doubt. Maybe it might work. Let us, okay. Anyway, the risk is small. Nothing wrong in accepting because it is a fresh zone. We can plan a trade like this. Even if you get a loss, it's a minimal loss within the accepted level. But today what happened? The zone is easily violated. Whatever the benefit of doubt we have given, that is spoiled. That didn't work out. What I mean to say, it didn't work out. So it is not having any orders, pending orders at all. See, not even it has given any resistance. Easily it is violated. But anyway, in our analysis, we considered this is a zone because we can't really reject this candle because it is not a very good ERC candle, maybe a little bigger than average candle. So that's why a benefit of doubt we have given for this. Consider all these candles as a base candles. So this is violated. This is the only fresh zone we are having inside this zone. If everything would have in our favor, it could have been a good trade. But it is violated, we have to accept. So that way we got a loss. And Chambal Fet has given 1900 rupees loss. And it is a minus 1.3 ROI. 1.3 negative ROI. Because up to 2% on our capital, that is our on futures margin cost, we can accept the risk. Risk accepted level is up to 2%. Because we will be discussing these things in our next lesson, lesson 19. After completing lesson 18, currently lesson 18 is going on, practical session is pending. After that, in the lesson 19, we will be discussing about these risks. What is the maximum acceptable risk? What is your stop loss buffers? What is the position size? All these things, they are very important concepts, risk management point of view. And moreover, this is the final chapter for the risk management point of view. So minus 1.3% is the negative ROI. But here, if you look into this, below this there is a bear trap, below this zone. The 5 minutes bear trap, see here. We have a rally candle, we have a base candle, again we have a rally candle. The bear trap worked today. It worked very well. See, after the bear trap, prices went and reached the 15 minutes target. This is the 15 minutes target. Let me show you. Rally base drop. It reached the target. But we didn't accept the trade. If you would have accepted this trade, you would have got around 4,845 rupees profit, which is a 3.2% ROI. If you deduct the loss 1.2% ROI, still you would have got 2% profit from both these trades. One is the stopped out and another one is this bear trap. But why we didn't take the trade? Can you guess why we didn't take the trade? This trade is rejected. The reason is RR, risk reward. And from this demand zone to the supply zone, the target supply zone, the RR is only 1:1.9, not even 2, not even 1:2, less than 1:2. It is only 1:1.9. See, at least 1:2.5 RR is there. As an experienced person, we can accept. Instead of 1:3, experience, if you are an experienced person, at least 1:2 point level you can accept. But 1:1.9, it's not really an accepted error. That's why this trade is rejected. But actually it is successful. But we can't violate our risk management related concepts. So that is the reason why this trade is ignored. I'm not considering this is a valid trade. So these are the trades executed, 3 successful trades executed, and 1 trade we rejected, even though it is turned into a successful, but we rejected it. And remaining stocks we did not get the trade. Let me quickly show you. The first one is Navin Fluoride. So today you see here Navin Fluorine. Price did not get into this fine-tuned area. This is the way. We already discussed this stock earlier also. That's why I'm not getting into the details. We have fine-tuned, we've been waiting, prices didn't reach the fine-tuned 5 minutes area. And this is moving between high liquidity daily supply zone and daily demand zone. And daily demand zone recently tested the fine-tuned area and then moved up. Because it is tested, we cannot plan second trade here. We didn't have valid trades inside this high liquidity daily demand zone. The fine-tuned area is already tested. So we are anyway, no trade from the supply zone and no planned trades from the demand zone because it will be violated. And next one is Bandhan Bank. Bandhan Bank, we didn't plan any trade in this zone, 75-minute zone. It is rejected because the fine-tuned area is not proper. The risk point of view, even lower time frame, the price structure is not at all good. That's why I didn't further fine-tune. Below 75-minute zone, I didn't fine-tune this. Let me show you the 15 minutes, you will understand. This is the 15 minutes area, how it looks like. All these are all base candles. So this zone will be violated easily. But Bandhan Bank, I already explained in EMA confluence related example earlier. Do you remember EMA confluence and price overextension or price overextended? See here, the price is overextended. After that, the overextension is completed when prices are moving slowly towards the EMA. This is the daily EMA. In this daily EMA, there is no daily supply zone. There is no daily supply zone here. But there is a EMA confluence in this area. I have drawn this blue color line indicating this is the daily EMA. Because if I go to the lower time frame, we should remember where exactly EMA is there. During the EMA session, what did I explain? In lesson 17, I explained. In lesson 17.3 and lesson 17.4, in both, I explained about EMA confluence and price overextension. In price overextension, I explained EMA strategy also. EMA 20 trading strategy. See, when overextension completes, at the time mostly you find a lower time frame zone. In that lower time frame zone, you can plan the trade. Because this is a daily, what is the lower time frame? Below the daily, below any time frame is a lower time frame. But in this area, we need to find a zone. So for that, I looked into 75-minute zone. In 75 minutes also, there is no zone here. Okay, then where the blue color line, what I have drawn, that is the EMA. So around that area, there should be a zone. Because 75 there is no zone, I went to 15 minutes. 15 minutes also I did not find a zone. We have a drop. This is also a medium size leg candles. So there is no base candles. For that what I did again went to 5 minutes zone. Look here, the 5 minutes time frame. See here we have a medium size leg candle and 2 base candles. Now you will understand. So we have drawn a zone like this. and then we have a drop candle. Drop, two base candles and drop. Exactly in the EMA area, we have a 5-minute zone. See today what happened? Actually, not only today, even previous session also, trading session also, prices entered into that area. Today also it gave an entry today. See here, the last trading session on Friday, prices already entered in this area. Somebody would have gone for a short trade on Friday here in this zone. If anybody missed on Friday, today again morning hour, the first 9-15 minutes candle, it has given another entry here. See now what happened? How prices is down? Almost close to, okay, closing is 2.7% at some point of time. Over 3% the price is down from here. You would have got over 3%. If it is 3%, imagine if it would have been your a short trade in futures, you would have got even more profit. Maybe close to 10% or 11% ROI you would have got in this stock. But why I am not considering as part of, because at present we are evaluating only high liquidity zones. That's why our concentration is on the high liquidity zone. It doesn't mean high liquidity zone is the only concept works. There are other strategies. Recently you learned EMA confluence and EMA overextension strategy. I explained in lesson 17.4. I have explained about EMA confluence trading strategy. After overextension completes, price overextension completes. See how beautifully the trade worked. But when we have to use EMA strategy, only in the trending market. In ranging market, you should not use this strategy. That means if the trend is only uptrend or downtrend, then only you have to use this strategy at the time when overextension completes. And the zone that is having EMA confluence at the time of overextension completion. And which overextension? Daily overextension. A daily overextension is completed, lower time frames, you will take a trade. And here only 5-minute zone is having confluence. In that 5 minutes zone, whoever would have taken a trade on last Friday, if not on last Friday, maybe today, definitely you got a very good profit today. Who knows? It may go further, it may go down further also. That also possible. There is worst case scenario is also there. What is that? Now prices will reverse from here. It will break all the zones and start moving up. That possibility is also there. We cannot overrule anything. But at present, the trend is a downtrend in this stock. So obviously, short trades will be in our favor. That is what happened. The short trade is in our favor. Always we have to trade according to the trend. That means in favor of the trend you need to trade. Or in the direction of the trend you need to trade. You already learned a trend is your friend. Until the end, when there is a bend. I clearly explained this meaning during our trend discussions in the training, first phase of our training program. See, recently you completed these lessons. Whatever the lessons you completed recently, they are all working very well. That is what you have to observe. Actually, the EMA strategy is an advanced strategy. It should be part of our third phase of our training program. But I moved into the second phase. The reason is because EMA, anyway you are learning in the second phase. Without EMA, we cannot calculate odd enhancers. So that is the reason why EMA I explained. Along with the EMA, I also explained the strategy to you. The moment you learn the strategy, Previously also you have seen EMA confluence how it worked, I think in Friday or Thursday. And today again you are seeing in this stock. They are all working very well. But only point you should not forget, this EMA strategy works only when overextension completes, and it should be a trending market, not the ranging market. If you forget these conditions, EMA strategy will fail. You feel like it is a disaster. You should not use EMAs during a sideways market, only in the trending, that is uptrend or downtrend. Uptrend it is a long trades, and downtrend it is a short trades at the time overextension completes and a zone is having EMA confluence. Okay, this is one good lesson for you from this analysis part. And next one is 75-minute zone, I guess. Mahindra and Mahindra Finance. We were waiting for a trade in this zone, fine-tuned area. Actually, we have several fine-tuned zones here. This is the one, this is the one, this is the one in this area. But prices did not enter. Actually, this analysis we did previously. Previously also we missed this trade. Look into this. Somewhere here it was listed near the zone. We missed this trade. That is on Wednesday, last Wednesday. Prices did not enter into the fine-tuned area. Today also prices did not enter into this zone. We didn't get the trade. And the last one is Polycab. Polycab is also high liquidity supply zone. But here the structure, this is 75 minutes, the structure on the 15 minutes is not very clear. Look here, the 15 minutes structure is not good. All the candles are not proper. See, all these are all base candles. When you have so many base candles like this, what happens to this zone? The zone will be easily violated. So expecting this zone will be violated. So we didn't plan any trade on this Polycab. Even prices also I think just reached into the zone and came down today. The reason is institutions created a new zone here, rally, base, drop. That was the reason why it came down. It may not be because of this particular zone. So these are the high liquidity zones we generated in our previous report. Hope this information is useful to you. Let us all meet again in our next video. Thank you.